UK-friendly finance English. Phrases to avoid with a CFO. Welcome! Today we're sharpening your language for senior finance leaders, especially those in the UK. The goal is simple. Speak clearly, credibly, and concisely so your message lands in the first 30 seconds. We'll avoid US-only jargon that can distract or confuse, and we'll swap in UK-friendly terms without losing precision. Expect tight phrasing, concrete numbers, and short time frames. If you can show impact in pounds, percentages, and months, you'll earn trust fast. By the end, you'll have practical swaps and wording you can use in your next board pack or steering meeting. Avoid saying, "We'll drive value at scale." It sounds big, but says nothing. The problem is, it's a buzzword with no metric. Listeners can't test it. Instead, use a UK-friendly, measurable line. We'll reduce cost by 6% across 4 sites. Stronger still. Baseline is £20 million annual site costs. Target £1.2 million savings within 9 months. Tip: always name the metric, cost, margin, churn, the baseline, today's number, and the time frame, by when. Specifics turn ambition into accountability and make approval easier. Skip, it'll hit EBITDA nicely. One metric can hide trade-offs in cash, capex, or working capital. A clearer UK-friendly option improves operating profit by £800,000. Cash impact in Q3 after supplier terms reset. Better yet, P&L uplift £800,000. Cash inflow £500,000 in Q3. Capex £300,000 in Q2. Tip: show P&L, cash and timing together. Finance leaders think in linked statements. When you place profit, cash, and calendar side by side, they can judge sustainability and risk immediately. Avoid, "This is a game changer." It's subjective and triggers skepticism. Lead with evidence instead. Risk-adjusted NPV £3.1 million. Payback in 11 months. If helpful, add drivers. Assumes 6% churn reduction, 2% price uplift, and £400,000 one-off capex. You can still signal confidence without hype. High confidence based on 3 pilots, variance plus or minus 10%. Tip: evidence beats adjectives. Start with the model output, then show sensitivities and what would change your mind. That framing earns airtime with a UK carbon monohypofluorite. Small-term swaps prevent friction. In the UK, turnover is commonly used where the US says revenue. Both mean sales, but choose the audience's term. SG&A often becomes overheads, especially in operational discussions. Inventory is typically stock in UK reports. Quarter or Q1, Q2 works on both sides, but say financial year rather than fiscal year in UK decks. Consistency matters. Pick one set of terms and use them throughout the pack, including charts, footnotes, and commentary, so stakeholders don't pause to translate mid-meeting. Replace vague finance slang with precise statements. Instead of runway, say, cash coverage, 7 months at current burn. Swap write-off for impairment/expense, recognized in Q4, which clarifies treatment and timing. Change top-line growth to turnover up 9% year-on-year, tying to reported metrics. Replace synergies with cost savings of £2.4 million from procurement, logistics, and IT licenses. These alternatives make auditors, boards, and UK finance teams comfortable because they map directly to financial statements and controls. Lead with the number, then the story. £1.5 million annual savings. Payback in 10 months? Here's how. Immediately state assumptions and data sources. For example, based on FY23 actuals and supplier contracts. Clarify currency and FX rate up front. All figures in pound, converted from euro at 0.86. Offer two options with risks and mitigations. Option A, higher NPV, longer implementation, mitigated by phased rollout. Option B, faster cash, lower strategic upside, mitigated by renegotiated terms. This structure answers the CFO's first questions before they're asked. Cut buzzwords. Quantify outcomes with metric, baseline, and time frame. Translate US terms to UK equivalents. Turnover, overheads, stock, financial year. Balance profit, cash, and timing so trade-offs are visible. Practice now. Take one slide from your deck and rewrite it using UK-friendly terms. Start with the headline number, add assumptions, and specify currency and timing. Aim for 3 crisp sentences that a CFO could repeat to the board without editing. Clear, numbered, and time-bound beats flashy every time.